What's up, everybody? Welcome back to Trading Wars. Thanks for joining me today. Today is a very important day. We will be going through all of the different setups and patterns that I use on a daily basis. I'm going to be putting it together in a nice little package for you today, and we're going to go through many examples that we had throughout the week. All right. So if you're ready, let's step into the war zone. So before we begin, please let me know where you're tuning in from tonight. Let me shout you out. Big up to all the Trading Wars Army members in the building. What's going on, Ron? Good to see you. Roop, Jason, Alicia, B Cart, what's going on? No Shirt now, what's going on? Bad Indie in the building. Mittel, what's going on, brother? Tom in the building. Liz in the building. Nickel, what's going on? Luca, Harris, Ernesto, Michael, good to see you guys. STK in the building, right there. Boom. What do we have? Melbourne, Florida, Toronto, South Florida, Atlanta, New York, OKC, Queens. All right, we got that. We got the squad in here. Let's begin. So get the pen and the pad out right now because we're going to be writing a few things down before we get into the lesson. So hit me with a 3 when you have the pen and the pad ready to go. All right. And for those of you that have your books, then you can just go to the relevant sections in the book and you can take some notes if you want to as well. Okay. So let's do this. All right. So all of my trading strategies. So these are ones that I use on a daily basis. So the first one is the orb. Okay, so the orb is on the 3, 5, and the 15-minute chart. So what is the orb? It just means taking the break of the first bar. That's it. Okay, so I'm going to show you examples, okay, as we go. But the opening, let me just go through these on a high level. And I'm going to demonstrate with Friday because Friday we actually did everything, which was great. So the first trading strategy is the opening range breakout. So what it means is you wait for these time frames, the 3, the 5, and or the 15. I like to always focus on the 3-minute chart. Okay, you can choose any one you want. The higher you go, obviously, the longer it's going to take. So for new traders, sometimes the 3-minute is a little bit more difficult. But I love being on the 3, and then I like to look at the 15. I don't use the 5 as much anymore, but it's still a great time frame. Okay. So we're just taking the break of the first bar. So let me begin. I'm going to go hit the replay to Friday, which is here. Okay. So you always let the first candle settle in like this. And then you decide if you're going to take an opening range breakout or not. So when I take an opening range breakout, it's very simple. I take an opening range breakout if we have a significant gap on the chart, because I'm anticipating if we gap that somebody is in trouble, like somebody is red. Okay, it could be the bears or the bulls. It doesn't matter. I'm looking for volatility. So anytime there's a major gap, that's when I use the orb. Or nowadays, I'm adding a little bit more to my orb trading on certain candlestick patterns. So for example, we had this very powerful hammer candle. So that was a pattern that I'll use for the opening range breakout because it shows me that it shows me here, guys, that we have this long buying pressure, long buying wick. And with that wick, guys, that shows me there's bulls in here. So I'm not going to be automatically bullish or bearish. No, what I do is I let the candle tell me what to do next. So if it breaks the high, I want to go for calls. If it breaks the low, I want to go for puts or long and short. Okay. So what happens here on the next bar, you could see is it actually breaks the low. So we went short on this on Friday. Okay. And I'm going to show you the live commentary in a bit. Let's just continue to go through this. Okay. So hit me with a 5 if you understand the orb. So orb opening range breakout, you wait for the first candle to close. Then you have your orders on both sides. So you remain neutral until the price action tells you what to do. And I like doing that because it allows me not to have a bias and it allows me to just, trade what's in front of me. Okay. So I just want to, I always want to be open-minded. I don't want to have a bias because you got to trade what's in front of you. That's the only way. If you trade with a bias and you keep doing that, eventually you're going to get burned. And the reason is because the market constantly changes. Okay. So here we go. So we had the orb. The next one we call is the fractal. Okay. So the fractal is any one of the trading war patterns on a lower time frame. So we're talking about inside bars, outside bars, nirvana, holy grails and double inside bars. Okay. So on Friday, we actually had this one as well. So if we continue here, you could see we had this inside bar. So that's what I call a fractal trade. It's fractal because it's happening on a tiny time frame. Okay. So here's that inside bar, fractal, breaks the low, goes short as well. Okay. So that one is pretty simple. So the indicators are already all set up. So you have the colors, you have the highlights. So it's not difficult, right? The indicators are for free on my Twitter, and on my Discord, I have the upgraded ones if you want to send alerts directly to your phone, to your email, etc. Okay. So what we're looking for is the blue is the nirvana, the yellow is the holy grail, white is an outside bar, and the yellow candle is an inside. So we just take those candles, and it's the same thing to an orb where we just go ahead and take the breakout. We don't have a bias for those either. Okay. You could have a bias. Okay. But generally we don't. All right. So let's continue now. Go ahead and hit me with a 7 if you follow me there on the fractal trade. Okay. And the next thing we have are Fibonacci legs. And these are probably the most advanced, but the most rewarding. So actually, let's leave this one for last because it's a little bit more advanced. So let's go back to this one now. Trigger trades. Okay. So trigger trades are just levels. They're just levels that I identify the day before. So they're like line in the sand. Okay. So you'll see here in the room, I always put these triggers. So like this was for Friday as an example. So go short below this line, go long above this line. And what that's looking for is just immediate breakouts. Okay. And I'm going to show you a lot of examples of that, but we're not going to take too long today because I have to leave a little bit early. All right. So there's the triggers. And then the last one is the Fibonacci, which is mainly the morning. So I have a whole book on this because this is the most advanced, but the most rewarding. Morning leg, afternoon leg, and previous day's range. All right. So, okay. So now what we're going to do is I'm going to go through each of the days during the week, all my live call outs, and I'm going to show you all of these in real time. All right. So hit me with a 4 for the 4 horsemen, and hit me with a 4 if you're ready to step into the war zone, and let's get dirty. Okay. Corey, what's going on, my brother? Thank you very much for the super sticker, $4.99. Appreciate that very much, sir. Triggers are, I've said it many times, they're a combination of average true range, Fibonacci, support and resistance, many things. I change them a lot because they have to adapt based on the market. If the market's more volatile, your triggers are going to be more volatile. If your market's more tight, it's going to be more tight. You have to be able to adapt those triggers constantly, okay? All right, so we're going to go into Friday. Let me hit the replay again and we can start. Okay, so here was Friday. Boom. All right. Okay. So what I like to do is always have the previous day's low and high just as a reference. So let's go ahead here and draw the previous day's low because this is where we open near. Okay. So we open near the previous day's low. So let's go to the Discord and let's walk through this now. Okay. So every morning I let the members know what's the game plan. Are we going to take an orb or not? So on Friday, you could see here, we started off short at 9:34. We used the orb. Okay. So 1 minute to close on the orb. Get ready. Are you ready? Short. So we went short on the orb. And then the next thing we did here was the inside bar. I said, hope this breaks to the downside. We'll add more to the short. So let me walk you through that. So first candle comes in right here. Boom. Like we said, that was a nice little hammer. So we're just waiting to see where it breaks. We're going to go short below and we're going to go long above. So it breaks to the downside right there. That's a good first target. What I like to do with the targets is you could take a note of this is I take the Fibonacci on the candle from high to low like this. And then I just use these targets on the way down as my targets. Those are all Fibonacci based. Very simple. Okay. So from there, we had the inside bar. So we added one more time short when it broke there. So we had a double position, short, short, boom. And then we just scaled out. Every time we make a new low, we just scale out. Okay. That's the easiest way to do it. That's the way to maximize option gains, just gains in general. You want to be, if you're short, every time we make a new low, you want to cover some to lock in some profit. Then from there, we had the 618. So the 618, let me just fast forward it here. So we had actually two 618s. We had this one, and then we also had this one here, right there. Okay. So the fib legs are, let me explain it to you. Essentially what you're doing is you're looking for that first push of the day. And then you take a fib from the high to the low like this. And then you look for basically the 618. So you can just take it right at the level, or you can wait for a candlestick confirmation. So you can see over here, we actually had this inverted hammer confirming that there was selling pressure. And if we take it all the way down here, you could see that we came back up to the 618 again, and we had these hammers. And then once we broke the low, boom, we flushed. Okay. So there we go. So that was Friday. And that's pretty much it. If I have like 2 or 3 winners in a row, I'm gonna just call it. I'm not gonna go overboard. I'm just going to take my money and go, because there's gonna be days when you get beat up, and you'll see sometimes earlier in the week we got beat up a little bit. But when you make your money, you got to make sure that you lock it in, you don't overtrade, step back, you go to the beach. Okay. So the other thing is the previous day's range extension. Let me go ahead and show you this very quickly. Apple. So we did this call out on stream. Okay. So I did a live stream video on Friday. I did live trading. Please check that video out if you have time, if you didn't get to see it. And this is the last part of my strategy. It's called the previous day's range. It's a very simple one because everything is set in stone. So if you see Apple here, this was the Friday. So what I do is I take the previous day's range. I go from the high right here to the low, and I just extend it out. Okay. So the low is here. So just take this like this. Okay. And I extend it out. So what I'm looking for at these major Fibonacci levels for some kind of pattern, some kind of confirmation that this could be the low. So you could see here that the Fibonacci on Apple worked extremely well. We had the 272 bounce, we had the 50 bounce, and then over here, this is the one that I did live, this call out. We had this Nirvana, and I really like this Nirvana because it hugged the 618 a few times. So we just got long right above that white line. These calls went for about 100% into the close. Okay. So really and truly, that's all my strategy right there. All right. So hit me with a 10 if you followed me there. Those are all my strategies. Orbs, okay, fractals, triggers, fibs. That's it. And the fib is a 3-part strategy: morning leg, afternoon leg, and previous day's range. And when the fib has the best risk to reward because you're always doing the opposite of what the chart is telling you. That's why I love the Fibonacci. So for example, like when we're pulling back up here and we're going up, we're not buying calls, we're actually shorting. And this gives you a good risk to reward. And that's what's going to make you money in the long run. Okay. So let's continue now. So let's get rid of, that was Friday. I have about 15 minutes. Okay, we can do this. All right, so let's go ahead into Thursday. So on Thursday, we had a very similar day. Let me hit the replay. I think we pretty much did the same thing on Thursday. So I'm going to take the yellow line and I'm going to move it down because I just want to reference where we are. And here we go, the first candle. So let me zoom in here. I like this candle here because it was like a neutral candle with wicks on both sides. So I went ahead and did the 3-minute orb. Okay, and let me just get the commentary. Okay, get the commentary. Okay, so here we go. 2 minutes to open, send me some power, tempted to take an orb. So I was debating in the morning, but once I saw that candle, that gave me confidence. So I'm going to try the 3-minute orb, small size, just want to test the water. So we went short right here at 935. Okay, and then once we broke, you could see here, we broke the low, bam. So there's your money right there. That's about 1 candle's worth. That's good money right there. So you don't have to be too greedy. You know, you get your consistent gains and they add up. So there's your 3-minute orb, clean. And then from there, we had the 618 fib. So let me go ahead and draw the fib. So what you want to do is you want to anchor your high and then you move your low until we find a bottom. Okay. So we continue here. There. Okay. So every time we make a new low, I will move this anchor. But if we don't, I keep it here. Now, what am I watching? I'm watching the 618 right here. I'm always watching the 618. Okay. So here we go. Boom. Back to the 618. Here's your short entry right here. Boom. Roll over. New low. There you go. That's what you look for. You want to get in the 618 and you want to cover into a new low. Okay. Yeah. I'm sorry if I'm going a little bit fast today, guys, but I gotta leave a little bit early today. So you can definitely rewatch this one though. The last thing that we did here, guys, is we took a V trigger. So let's go ahead and talk about the V trigger now. So the V trigger is the level that I told you about, right? So here was the level for Thursday. So 457.67. Okay. So that's the level that we're watching. That's what we call the line in the sand. So 457.67. Was it 67? Yeah. Let's write that down. Doing it right? 457, and that's for March 30th, which is, are we on the right chart? No, sorry. I knew something was off. Here we go for the 31st. So 456.94. 456.94. Okay. So there we go. Man, I can't type today. There we go. Okay. So this is the line in the sand. So if you look closely, this red line is above the previous day's low. So the whole point of this is if I break this red line, I want to go ahead and attack the previous day's low. Like I'm assuming that it's going to break like this and it's going to go down. That's the whole point. Okay. So let's watch the price action here. So once we had those winning plays, there's no need to chase, right? Like, so we had our orb, we had our fib, everything is going well. We don't need to chase. Like, we don't need to like rush in. What I like doing this is, what I like doing is actually waiting a little bit to the afternoon. So this concept I call the V trigger. I like to see this level get tested a few times, because the more it gets tested, eventually it's getting weaker. You know what I mean? It's like someone's knocking on the wall. The wall's getting weaker and weaker and weaker until they hit it one more time and it breaks. That's the way I like to think about them. Obviously, it doesn't work like that all the time, but that's the way I like to think about these. Okay. So let's watch now. So this is something new that I'm adding to my room, where I'm doing a little bit more commentary in the afternoon. So you can see it over here. So SPY trigger short, that was at 10, but then you see here 12:03. This is when I was looking for it. Wonder if today is another V trigger. Let's see. We will be back later. So we ended up going short right here, guys, around trigger making new low. So right around here, guys. So trigger, V trigger short, here was the plan, stop and a target right around 12:30. And you'll see why I like that here. So let's go ahead and watch this. Okay. So we pop up. All right. We pop up and we start coming back down. Okay. And this right here still for me is a little bit too early, because I already took 3 trades in the morning, right? So I want to wait until a little bit near the afternoon so I can get that last run into the afternoon. But you could definitely you could do this multiple times, right? But just for me on that day, I waited. I was patient. And then we came back here. Now, this is the time where it catches my attention, because notice here, the bulls had a big rally. Okay. So this is why I like this play a lot more. The bulls had a big rally. So their stop losses are likely going to be somewhere right here. Okay. Because if you took this long, you had this run, you know, you're looking good, you're feeling nice, and you're okay until it comes back down here. Then you're going to be in danger. Okay. So this is what happens here. Now we start to turn around. Now this is where I'm really watching the trigger right here. I'm watching it. Okay. I'm watching it. Boom. Okay. So there's the entry right here. Like I said, this was around 12:24. You could see right around here, 12:35. Okay. And what I'm looking for here is I want to attack the yellow line, which is the previous day's low. Okay. And sometimes it's just a clean push and sometimes a little bit choppy, but there we go. So once we get to that yellow line, that's basically my target. And then what I want to do from there is see if I can hold anything into like an afternoon sell-off, because sometimes that happens, right? Like this. Boom, 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 boom. Okay. So we had a little bit, one more push, and we pull back up. And you're going to see actually the day before, sometimes those triggers will just flush all the way down into the close. All right. So hit me with a 7 if you're following me there. Right. So that was a pretty jam-packed day. And let's go ahead now to the Wednesday. Okay. So we're going to hit the replay. So at the beginning of the week, we started off a little bit slow and it was a little bit tough psychologically. It was definitely a little bit tough, but that's what happens sometimes. You don't know when your winners are going to be. They could be at the beginning or they could be at the end of the week. So you'll see how we recovered from that. So the first 5-minute bar comes in here. And what we do here is I just waited, because you notice that this bar, if I just take this yellow line and I pull it back up now over here, we're still in the range, right? We're not gapping significantly. And this candle is not really something impressive. It's not a hammer. It's, you know, this is half of a wick. So I was like, all right, I'm just going to wait. And then we came and we got this inside bar. So this inside bar was looking very good. So we just went ahead and took the short once it broke the low. And then you can see the next candle, it came and stopped us out immediately. This is what we call a fake out. So inside bar fake out, it happens. Okay. And we took a stop right there, but then right away we had the Nirvana. So the Nirvana is an inside followed by an outside. So we had the Nirvana, we went ahead and we took that one long. Okay. Once it broke to the upside there, you can see boom, boom, boom. So there we go. So we got good money on the Nirvana. And then the next thing I went ahead and did was the 618 leg. So same thing. We take the Fibonacci from the low to the high. And now we're going to wait. There's your 618 right there. And honestly speaking, every time you get filled on a big red candle like that, it is a little bit scary, but you just got to trust your process and your system and, you know, just keep a good risk to reward. So here we go. We got filled on the 618. And then immediately after, bam, we got that pop right up. So what I like to do is once I get filled on the 618, I like to just use all of these targets on the way back up. And then I put the stop loss to break even once I'm, you know, far enough away. So that way I have a risk-free trade, and you'll see that one paid well because the very next candle came and stopped us out. So that was good. I was really proud of that one. It was a little bit tougher for sure. And let me just go ahead and show you the commentary on that day. So where were we? What day is that? 30th. Okay, so let's go to the 30th. Right here. Okay, so again, so you can see we started off right here off the bat. So we went short. There's the inside bar, but let me go to the beginning so I can show you the commentary. All right, so there was a lot of commentary on this day because I'm just telling people, hey, I'm waiting and I don't want anybody to jump the gun. So we had an inside open today right in the middle of the range. Let's size down and take our time. So I'm going to pass on the orb today just to be safe based on the odds. So we just waited. And then we said here was when we identified the inside bar. So I said, could be a 5-minute inside bar here, 4 minutes to close, send me some positive energy. Then we had the inside bar right here. And then we went short, right? I said we went short. And then we came and we got stopped. So you could see right here, it got stopped out on the rest, took a small loss, hate this choppy price action. Then right there, we went ahead and we did the Nirvana long. And I said, this is my last play. If we get stopped out on this, that means we're in straight chop. No need to overtrade, drop a heart, send this up. So boom, we got the big bang there. And then we went ahead here and we did the bonus play, which was the Fibonacci that I just talked about. And then we went long here on the 618 and we hit our targets. Then I came back in the afternoon because we had that trigger again. So let's go ahead and get that trigger. So the date is the 30th. So the plan is right here. So we went short 457.67. So let's go ahead and draw that together now. So we're going to do the same thing. We're going to do a red line, 457.67. Okay. And remember, I want to play these into the afternoon because I'm looking for that power hour drop, right? And you'll see in the live commentary right here, we ended up, so right here, I'm watching the trigger short near the end of the day for a scalp opportunity. We'll check back later. So we ended up going short right here. So this is 1504, guys. Okay. So that's basically near the end of the day. We took this one. Okay. So we went short. Now watch, I want to show you this. Okay. So we have the red line here, which is the line in the sand. So we're just going to be hanging out and just watching the price action. So, you know, we chop around for a bit in the morning. We find some buyers a little bit right here. And you know, it starts to get really important because there's a buyer right there. Okay. That's also sitting on a Fibonacci. If I draw this from the low, this is the previous day's range. So that's sitting right there on the 618. So there's a bull algo there. We know that. So we're just patiently waiting here and we're watching to see what's going to happen if we can't hold this bull algo. What's going to happen? So here we go. We start to break down here a little bit. Okay. But I'm still waiting here. I'm still waiting for my red trigger. We come back, we chop a little bit, and then we start picking up steam right here. Boom, 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 boom. Okay. So this one, there's your fill. There's your target right there. Okay. Very clean. Then you can have your runners left on. Here we go. Right there. So you took us, you know, a little bit lower than the low. Okay. So that's what we like to look for. A little bit lower than the low. Okay. So that's what we look for, like an afternoon sell-off like that, something like this. Okay. But you have to always make sure to take targets because it could flip at any time. It can definitely flip at any time. All right. So hit me with a 3 if you follow me there so far. I have 7 more minutes. So let me do this real quick. Okay. So I'm just going to do this in fast mode because I want to do the giveaway. So we had on Tuesday, we had a 3-minute orb failure. So let me show you how that looks. So here was the Tuesday. You notice we gapped up. So I went ahead here and took the orb, but you could see it went higher, got filled long, turned around and stopped us out. So when that happens, I like to switch over to the 15. And then you'll see on the 15 here, right here, we ended up taking this 15 minutes short, which was a nice winner. Okay. So sometimes lower time frames might be faking you out and you got to either just wait, be patient, let the price action develop, or you can go to a higher time frame. And we do that a lot. Because a lot of the times the higher time frame is a little bit more clear, but you're not going to get huge big gains like you can on a lower time frame because the candles are so big. And then the last one we did was on Monday. So Monday was just a very simple trade. We went long right here on this candle right here. So we had a trigger long right here. So let me draw this line. Here was the line right here. So this was the previous day's high. So we went long right here on this yellow. And then here was our target. We pushed a little bit more up and then we kind of faded off. So you want to go ahead and always use the previous day's high and low as great areas of targets, at least to take some of your money off of the table. Okay. I don't like going back to the 5, because most of the times, by the time the 3-minute chart has failed, you'll already miss the 5-minute, right? Because for the 3-minute to fail, you need to have like 2 or 3 candles. So if that happens, your 5-minute will already be gone, right? So that's why I like to switch between the 3 and the 15-minute. Okay. So there we go, guys. That was a recap. Those are all of my strategies. Please rewatch this video as much times as you need to. And it's definitely gonna give you some good insights. Okay. So I hope you enjoyed this. Hit me with a 7 if you enjoyed this and if this was good. Let's go ahead and do a giveaway for one of the YouTube videos right now. Okay. So I'm just going to my channel. Go here. Can I get a drum roll, please, my friends? Okay. So I really appreciate all the comments. It really helps me, guys. Thank you very much. So let's go ahead, and this is the live trading video. So what I'm going to do right here is I'm going to just pick the first person today, just because I don't have enough time to count and all that stuff. All right, so here we go. So the winner is Miss Goody or Gotti. This is the video, live trading. This is the live trading video. Thank you very much for commenting and watching. I very much appreciate that. And guys, please make sure to always comment. And you always have a chance to win the giveaways. I do them every single Sunday, and this really helps my channel. So thank you very much. So Miss Gotti or Goody, please go ahead and DM me on Twitter. We will verify your account. And then once we verify your account, I'm going to go ahead and send you your book and your 1 month for free. Okay. Thank you very much. And then what else? Tradingwars.com. Okay. So guys, check me out at tradingwars.com if you're interested in what I do. You can get any one of my 3 books and you get 1 month for free. You can trade with us live tomorrow if you're interested. This is the Fib book, the Golden Partnership. It has the first section is all about fibs, and the second section is about fibs and options combined. So like how you do automated option trading, all those things. I have a lot of guides in there that you can read up on. So definitely check us out if you're interested, guys. And I really hope you learned something today. And just know the game is really about risk to reward at the end of the day. That's what it really comes down to. So it's not about being right all the time. It's about when you're right, you got to make good money. When you're wrong, you have to make, they need to be a small portion of your gains. And that's how you stay alive. Okay. Thank you so much for your time. I very much appreciate you on a Sunday. Please drop a comment for next week. You guys are the best. Thank you. And I will see you tomorrow. We do these every single day. Don't forget to subscribe. Take care.